Higher interest can be earned if access to the money is restricted in some way. One of these higher interest incentive products is a certificate of deposit. A certificate of deposit, or CD, is a time deposit. The difference between CDs and regular savings accounts is that the CD holder commits their money for a fixed period of time, and usually at a fixed rate of return. Credit. The products you have learned about so far are products which you can use with your own personal income. A credit card account, a product offered by both banks and many non-financial businesses, is very different from checking and savings accounts. So what is a credit card and what makes it different? A credit card is When you apply for a credit card, your credit history and a credit card is a piece of plastic with a magnetic strip containing information about you, like a debit card. However, a debit card is a buy now, pay now option, while a credit card is buy now, pay later. This often leads to trouble. Knowing how to use a credit card sensibly is important. If misused, it will lead to serious debt. When you apply for a credit card, your credit history and current situation will be assessed by the company offering the card. We'll talk about your credit report more later on in the course. If you have a steady income and your outgoings aren't too high, the card company should look favorably on your application and offer you a card that carries a spending limit of a certain amount. Let's say it's $1,000. This credit would be useful if you use the card within your means. You could pay an unexpected bill or put your groceries on the card and pay when the monthly bill is received. You could set up a direct debit to pay off the balance monthly. With credit cards, you don't have to pay back the full balance each month. What? How can that be? The company profits from lending you money. Problems arise because you have the option to pay a minimum amount each month. If you only pay that minimum, high rates of interest are charged on the unpaid balance. That rate is decided by the lending institution and can be changed at their discretion. Say you spend $200 using a card with an interest rate of 21%. If you repay $10 a month, it will take you 25 months to clear the $200. But the interest added in that time is another $48.31, another 5 months of repayments. Continuing to spend up to your limit, you are quickly in a position where you can only afford to pay the minimum, and the debt itself doesn't get paid off, as you are simply paying the interest. Sometimes people mistakenly withdraw more money from their checking account than there is available. Banks offer a service called Overdraft Protection, which is similar to credit cards in that it is a loan and interest is charged. However, banks often charge large fees as well. Overdraft protection often causes customers to fall into a trap or cycle that is difficult to overcome. Try to stay out of that trap. Now that you are familiar with banks and their various products and services, I hope you will steer clear of check cashing stores. They can take a large portion of your hard-earned dollar and offer you no interest and no safe place to save your money. They are no option for someone seeking financial help. Now that you are familiar with banks and their various products and services, I hope you will steer clear of check cashing stores. They can take a large portion of your hard-earned dollar and offer you no interest and no safe place to save your money. They are no option for someone seeking financial help. Money management tasks. In the first lesson, you learned about some of the financial products which can help you to use your money more effectively. Now that these products are familiar to you, it's really important to get to grips with managing our money on an everyday basis. Specifically, we need to where our money comes from and goes to, how we can keep track of it, how we can wisely use any surplus money that we have, and how we can best deal with unexpected shortages in funds. Please take a minute to think about and record on a sheet of paper your personal sources of income. Knowing what your total income is will help you in this lesson. Income is your pay after taxes, plus any sources of money you may have coming in. Alimony and child support are two examples. Once you've recorded this, your attention should turn to where your money goes. These expenses should include unavoidable payments such as rent or mortgage payments, utility bills, loan and insurance payments. Your list should also include day-to-day living expenses such as grocery shopping, transportation costs, and entertainment. It should include any other expenses you regularly incur, regardless of what they are. Now, what good are these lists? At this point, the two areas, income and expenses, should be brought together on one sheet. This is your personal budget worksheet and will allow you to see, for perhaps the first time, exactly what your financial position is. Do you have enough money coming in to cover the money you have going out? Perhaps you found it really difficult to remember what you'd spent when you tried to fill in the expense records. Hopefully, this exercise has helped you to appreciate just how difficult it can be to remember where your money goes. Remember to record all purchases you made with a debit card, as they count too. Part of running a successful business is keeping track of all expenses. In fact, knowing what money has been spent is so important that it is the law to keep comprehensive records, called accounts. What businesses do is keep every available receipt, bill, and bank statement in order to prove, for taxation purposes, exactly what they have. Imagine how useful a mini accounts system could be to you. Let's look at what is available to build such a system. First of all, you could keep all of the bills that you receive. Use a simple folder and create a section to hold bills, categorized by sender. The electric company, the telephone company, you know, the regulars. Filing in order will make tracking easy. More often than not, you are offered a receipt for purchases you have made and for each transaction on your checking account. How to store all these receipts may present some difficulties. Perhaps chucking them in a cookie jar or shoebox is not the answer, as you will be forever sorting and resorting them. No, perhaps a folder with dividers would be better. Filed in order, your bills and receipts should be retained for checking against your monthly bank statement to ensure that the correct amounts have been deducted from your account. Create a section in your folder to file each statement as it arrives. That way, you will have an up-to-date record of all the transactions that have been processed by Take a look at this sample bank statement. Try to locate the payments that have been made into your bank account, the regular direct debits, any cash withdrawals, and any checks. These are usually identified by locating the check's serial. You should expect to use your folder for a year. The following year, you should use a new one. The following year, another new one, and so on, for about 7 years. When paperwork is no longer needed, it is important to destroy or shred anything that has your personal information on it. It's the best management system in the world. You may still find yourself with an unexpected shortage of money, and you may be presented with a bill that you cannot pay from your checking account. Putting some money away for a rainy day is a very good strategy to adopt to avoid the problems that such a situation can bring. Divert a portion of any monthly surplus to a short-term savings account to create an emergency fund to deal with the occasional debt crisis. If you don't have such a fund, you may be forced into negotiating an overdraft line of credit with your bank, or into using a credit card, both of which will cost you more money.